Hi, I'm Nodilo with Pathlight Investors, and in this month's edition of the Pathlight Insight, I'd like to review the ongoings of 2015. In an effort to be brief, I would encourage you to read our hard copy report, which can be found on our website at pathlightinvestors.com. As 2015 began, markets were digesting three major issues, namely a strengthening US dollar, continuing declining oil prices, and erratic economic data. These three things put together had expectations for heightened volatility going into the year, which didn't disappoint, as we saw the S&P 500 decline by 3% in January, increase by almost 6% in February, and fall again by 1.5%, ending the quarter slightly below 1%. European stocks were a beneficiary of capital flight overseas that gained almost 5% on the quarter. And in the oil markets, we saw a decline of more than 10% again in the quarter alone, leading to a 12-month price decline of 53%. So let's talk quickly about the dollar. One of the biggest beneficiaries we see of the strengthening US dollar is the Eurozone, and in particular countries and businesses that rely on exporting goods. US businesses that import goods will likely be beneficiaries of heightened cost savings, as it costs less to bring in the same amount of materials and goods. But on the flip side of that coin, U.S. companies and multinationals that export goods and have currency translation from doing business around the world are likely to be challenged. Should a bull market continue in the U.S. dollar, it's something that merits close watch over the coming months and quarters. Turning to oil, a more than 50% decline over the last year has been dramatically negative for energy-related investments. But overall, we see it as a net positive. And this is because the U.S. economy is made up of more than 70% of consumer spending. And we think that it's likely consumer spending could accelerate as people continue to benefit from paying lower prices at the pump. And ultimately, this surplus cash will find its way into the economy on other goods and services. How we're looking forward, eventually stocks and bonds are going to be driven by four major things. They're going to be earnings, interest rates, the economy, and currency. And these things are going to create ongoing volatility, but also opportunity, we believe, especially as markets react or perhaps even overreact to the idea that the Federal Reserve might start raising interest rates for the first time since 2006. It's something that we're going to be closely watching, and we expect to be headlines throughout the coming year. That sums up the quarter. We appreciate your time, and we encourage you to reach out with any questions or to talk in more detail about how we see 2015 playing out. Thank you.